we're not, of course, going back to the technical picture. We just mean to remind ourselves that if we were seeing good positive momentum on the 1 hour, we would hold the trade that we're in. We were long yesterday, I believe, at $4,070 around these levels, maybe even 4,150. I was personally long at 4,150. Market so lower levels, then we are able to get long at 4,070. If we're long at these levels, we were looking into the prospect that this was going to be a 4B. Yes, just to understand what we're talking about, let's just throw out of this a bit. Okay, so we are looking, we were buying into this. We are of course inside of an Elliott structure, and therefore we always consider that the market will not is in a trending extension, will not break out of the Elliott structure, and therefore consider only to buy the growth advancing wave in the market. The growth advancing wave in the market will always be labeled 1 to 5. The current growth advancing wave into our market is this, starts at that point here, that Roman italic 1, Roman italic 2, Roman italic 3. This was a 4. What we're in, we had a 4. We thought this was 4A. So there was an ABC, that was 4A. There's going to be a 4B. We thought that was 4B. It's ends. Then there's going to be a 4C, A, B, C here in yellow. All this is a 4C. Market blows up into wave 5. Also in Roman italic here, showing wave 5. At that point, this is the end of wave 3. We have a label 1 all the way down. If this is an extension, then it's not really the end of wave 3. We get another correction and do the whole thing over again. This is not, of course, relevant now to us. Only the advance between 1 and 4 and 5 is the relevant information for us traders. Okay, so what we're saying is, we're saying degree, there is a degree 2, internal 1 and 2. This is a 3. So this is not a 4B. This is actually 4A. This is 4B. And this thing that we were calling 4C, ABC here, should have a label in 4C, right around, this is it. Now this market already did an internal 1, internal 2, this is a 3 and a 4. There's a neckline here, there can be a neckline here, yes. We can just draw this neckline down, and we're actually supporting on it in a third wave. So if this is an internal 1, internal 2, this is a 3, this is a 4. Okay, let's have the labels now move in. Okay, we use this very small label here. So we only label the internals. There's a 1, 2 here. This is now an internal 1 and an internal 3. We're trying to label a higher degree 3 that we are buying into, if we're, or that we are holding the market on behalf of, if we're already long. So there's a 1, 2, this is a 3. Now we're having a 4, A, B, C, D, E, whatever. We can take these labels higher, but I don't want to go into, maybe we should go into it. All this is internal 4 at the neckline as usual, which is very appropriate. Okay, so what all this means is that if we are long, since yesterday, I believe we just hold across the weekend. All this amounts to this. If we are not long, all right, if we are not in the market in the first place, we could actually consider that only over until the end of day today we could get to see, this is a 3, all right, this is still continuing, there's one, this is an extended 3, so there is a correction, yes, the market would move. There's supposedly a 4, there should be a 4 coming here, ABC, this ABC I'm showing here in yellow should come in some time. We don't have time, really we don't have time, but we don't like to buy that high. Okay, so we go to the 5 and 15 minutes, segregate this, get an entry. All right, wait for the internal degree 4 on the 5 and 15 minutes, take this throughout the weekend, hold it all around the weekend. We could be seeing 4,700, could be seeing 4,600 across the weekend. All right, if we are long already, please do nothing, just let it run across the weekend, don't add. All right, okay, so let's go now lower frames. Whatever we're buying at that point, we're only buying half size again. We understand now all the risk entailed and how we're going to be dealing with this risk. We talked about this several times, that we're going to be buying, adding another remaining size at the next subsequent neckline. All right, whatever that neckline is, it usually will stand out of all, because we will not be there across the weekend, so we're just adding remaining half size. You're seeing here, of course, an Elliott structure. It's very clear. There's a 1, 2, 3, 4, 5. You can get into the market at 4,375. Okay, so this could be 3. There's an A and a B and a C. Maybe bingo, this thing goes up. All right, so anyway, we have to treat it as a growth wave, not as a corrective wave. All right, and the growth wave would mean that actually start point of taking our fibs is this point where we are. Growth wave would mean that we expect it's vibrant and will not really move low. All right, and we want to get in at 78.6%. We don't want to be wishful thinkers that this is going to do 50%. It could not. Okay, so we just get in at 4,398.93 cents, 4,400. All right, and as the market moves higher, we drag this up higher by 78.6%. It does not matter. That's money, of course, at this point. Maybe everyone really has to be very careful with risk and very comfortable with the risk that they're holding. So if what I'm saying is not appropriate to your risk level, please don't do it. Don't feel compelled or anything that you have to do it. Okay, this is what I would do. Sometimes I'm a risk taker, sometimes I'm not. So I could be really wrong, I could be mistaken, but at sometimes I consider that if you don't get in the market now, you will not have that opportunity. So if it's only small size, half size, we know how to get out of it, probably at 3,200 if we ever get there. Also, you would want to take into consideration the profit. We're buying 4,400, we're going to 4,600. Okay, $200 higher, we're going to, of course, 4,700, 4,627. We will not increase size. So even if it means that buying half, we usually buy 2 coins with Ethereum. Buying 1 coin or 1.5 coin, sorry, only just buying 1 coin, not even 1.5 coin. Buying 1 coin will only do us $200. We need more. We will not increase size. We will rely on the fact that we have a good entry. If this market really deserved increase in size, that it will not only take us to 4,700, it will take us actually to 5,000, overshoot, that is, and 5,200 and so on. So we just want to get that iron in, that size, small size in at that level, 4,400. No stops. We're gonna have to add to it, remember, at 3,200. We already did this several times on our analysis, so I don't believe how we add, that is, I don't believe we have to do it again. Okay, so let's take a look at the 5 minutes also to check. We have definitely a level 2 here. Okay, so what we're saying holds, I think, anyway. That's what is showing on the technical chart. And we win. If you're not in the market, you want to get in at 4,400. If you're already in the market, I would strongly advise that we do not add, do nothing whatsoever, and just let the trade run. According to this 5 minute chart, you even need to move your, yeah, you're right, you need to move your fibs a bit higher. You should get in at 4,410. Over here the price is 4,421, so you're looking at 4,407 is your earliest entry, which is of course 4,410 if you're going to be doing spread.